Okay, Jim, look, first, thank you very much for taking the time. I got to tell you that when I worked with Peter Lynch after Harvard Business School, you were a huge inspiration, not just because of your investment results, but because you travel, you live life, and you look left and right. And that's very refreshing. So thanks for the opportunity. There are a number of issues. I hope, especially one is we foresee a crack in confidence at some point, and we've seen over 20 years of quantitative easing in Japan, 7, 8 years of NERP in Europe and Japan. Are central banks maxing out at some point, or is this an infinite game?
Soon, Florian. They're probably in the next few months, if not before. You're going to see the end of all of this. Now, the next downturn is going to be worse than anything we've experienced in our lifetime. Depending on what happens, it might be the final one where everything totally collapses. Let's assume we get through the next collapse and that there's a recovery for whatever reason. The one after that will be the end. So it's either the next one or the one after that, which is going to be the end of everything we know.
I'm in your camp. I sense a degree of urgency. I've been careful. I wrote a bestseller in Germany, and we said 2017. What gets you sensitive on timing? Because you've been very reluctant on the timing for a long, long time.
Well, my timing has always been horrible. I'm the single worst market timer in the world. Nobody's as bad as I am as far as short-term trading is concerned. But, it's been almost 8 years, going on 8 years since our last economic problem in the world. And historically, doesn't have to happen, but historically it's been 4 to 7 years since the beginning of the American Republic. So I would suspect that after this election, everybody will realize, well, what do we do now? The policies have not worked anywhere in the world. Interest rates are already going up. So I would suspect next year is the end of the story.
Oh, we're in the same camp. Where do you see the greatest pockets of overvaluation and risk, Jim?
Well, the greatest pockets are in the American Nifty 20, whatever the number is. The Amazons, the Apples, the ones that never go down. That's where the overvaluation is. The American stock market, most stocks have been going down.
Sure.
A few big stocks have held the averages up, but around the world, stocks are going down everywhere, except for a few big stocks in America holding up the averages.
When I looked at your history and you performed so well with George Soros in a very turbulent market over a decade, up and down, left and right, where do you think, if one wanted to invest, besides inverse exchange-traded funds or put options, where would you harbor your assets?
Well, I would learn to sell short, you just said, except for that, but I would certainly learn to sell short if I were everybody.
Yeah.
If you're looking for places, maybe Russia. Russia's certainly depressed. It has hit bottom. Maybe parts of China. Some parts of the Chinese economy are going to do well no matter what. Pollution cleanup in China. China's terribly filthy. The Chinese are spending lots of money to clean up China now. So there are some parts of the world economy that are going to do well no matter what happens, and that's where you should hide. The main place to hide for most people would be just own U.S. dollars. When the turmoil comes, most people are going to look for a safe haven. They think the U.S. dollar is a safe haven. It's not, Florian, but they think it is. So the U.S. dollar will probably be the best for many people.
I've followed these markets for 4 decades, and I've really been very fortunate to win lots of awards, but I've never seen the following. I've never seen you being short, George Soros being net short, Carl Icahn being net short, and even Crispin O'Day in London, and in a little way myself. Do you know anybody who's very sharp, with a spectacular track record, who's really long?
Well, Florian, I don't pay attention to other people, so I'm the wrong person to ask. I don't have a TV. I don't watch those TV shows, so I don't really know what's going on and don't really care.
Some people like to go to gold, and in 2008, gold collapsed, initially losing 30%, then did amazingly well. What I like is that you're not a classical gold bear or bull, but do you think gold will weather this, even though gold has become almost a stock?
Well, I own gold and have for a long time. I haven't bought any really since 2011, 2010 to be precise. I am looking for another opportunity to buy gold before this is over, Florian.
Okay.
Many governments are going to lose confidence. Many people are going to lose confidence in most governments, in most paper money. And when that happens, historically, people put their money in gold and silver. Doesn't matter whether they should or not. That's what they do. So the next time gold goes down, I hope I'm smart enough to buy perhaps a lot of gold. Because in the coming turmoil, gold will go up a lot.
Thank you, Jim. You're sitting in a part of the world, in a currency which has, at least nominally, real asset backing. Singapore dollar, and Singapore is generally considered a safe haven. Do you believe, I mean, you probably know Singapore very well. Do you think the Singapore dollar may survive this coming mess?
No, I don't. Mainly because all currencies are going to go down against the U.S. dollar because it's going to be strong. And Singapore, if you get out the IMF numbers, you will see that Singapore is one of the most indebted nations